A couple of years back, I decided it was time to change my 10-year-old car. Now, to decide which one I should buy, I spent a lot of time researching, from talking to friends to reading reviews to then finally taking test drives of almost all the top selling cars in India. Now, for that time, I sort of became a car expert. You ask me anything and Pat would be the reply. And then after some time, I finally found the car that met all my requirements. Now, I'm sure you would have been through a similar experience when buying a car. But that is about buying a physical car. What about the stock? Of the top automakers listed in the Indian markets, which one is best for your portfolio? Well, we'll try to find out in this video. Hello and welcome to ET Money's YouTube channel. Today we will compare the top 3 auto manufacturers by market size: Mahindra & Mahindra, Maruti Suzuki and Tata Motors. Just as buying a car requires you to do a 360-degree research, in this video we will compare the 3 stocks from multiple perspectives, which are on your screen. Now this video belongs to our company analysis and comparisons playlist. If you want to watch more such videos, I have mentioned the link to the playlist in the description. Let's begin with comparing the businesses of the 3 companies. Now on the face of it, all 3 companies are auto manufacturers, so compare their businesses may look like a futile exercise. But that's not so. The 3 companies have some stark differences among their businesses and products. Let's start with Mahindra & Mahindra. So M&M makes SUVs, right? Yes, but that's not the complete answer. M&M has diverse business interests ranging from automotive, farm equipment, technology services, financial services, renewable energy, logistics, hospitality, real estate and others. So when you talk about SUVs, you're talking about the automotive segment of the company. Now, this segment manufactures not just SUVs, but also 3-wheelers, pickup trucks, large commercial vehicles such as trucks and buses, small commercial vehicles, and even holds license to manufacture the classic Java motorcycles in India. But known for its SUVs, M&M has a wide range there too, including the Thar and Thar Rocks, XUV 700 and XUV 3XO, Scorpio N and Scorpio Classic, Bolero and Bolero Neo. Its EV range includes the XUV 400, the XEV 9e and the BE6. Now M&M's farm equipment division manufactures the Mahindra brand of tractors and farm equipments, the Swaraj brand of tractors and farm equipment, farm machinery, and even has an agriculture related business under Mahindra Agri. The company's technology services come under Tech Mahindra. Its financial services are under M&M Financial Services. The real estate business is sheltered under Mahindra Life Spaces. The logistics business belongs to Mahindra Logistics. The holidays business is handled by Mahindra Holidays and Resorts, and all these are listed companies. Its renewable energy business comes under Mahindra Sustain. And that's not all. There are other businesses and subsidiaries too. Now this is sufficient to give you an idea of the extent of the Mahindra Group. On your screen is the list of Mahindra Group's listed companies, their FY24 revenues and M&M's stake in them. Notably, Tech Mahindra is not a subsidiary of M&M but an associate company, as M&M has a less than 50% stake in it. The rest are M&M subsidiaries. Now as of Q2 FY24, the automotive and farm segments contributed about 77% of M&M's total revenue of about 39,000 crore. Now M&M's standalone business houses its automotive and farm equipment verticals. So for our purposes, it's the standalone business of the company that's comparable to Maruti Suzuki and Tata Motors. But for an investor in the company, is the complete package you get the exposure to. So do keep that in mind. Next comes Maruti Suzuki. Maruti's business is rather simple: manufacture and sale of passenger cars. The company's offering are further divided into 4 sales channels. First, Maruti Suzuki Arena, which sells budget cars including the Alto K10, Swift Desire, Ertiga, Brezza and so on. Second, Nexa, which sells premium cars including the Grand Vitara, Jimny, Fronx, XL6, Ciaz, etc. Third, True Value, which sells pre-owned Maruti cars. And fourth, Commercial, which sells the goods carriers and passenger carriers. Now Maruti's goods carrier are Super Carry and Eco Cargo, and passenger carriers include the tour range of cars. Then there is a range of related services including the Maruti Suzuki Driving School, insurance broking, genuine parts, smart finance, exchange and so on. Now, in terms of revenue segments, the company has just two segments: sale of products and other operating revenues. Now, as of Q2 FY25, the former contributed about 95% of the total revenue of about 37,450 crore. Alright, let's now take a look at Tata Motors. Tata Motors has four businesses: commercial vehicles, passenger vehicles, EVs, and luxury vehicles. Its commercial vehicle division manufactures trucks and pickup trucks, buses and vans, and smart buses for public transport. Its passenger vehicle segment offers a range of cars including the Tiago, Altroz, Tigor, Safari, Punch, Nexon, and Harrier. The electric vehicle segment manufactures the EV variants of Tata Motors cars, and the luxury segment includes the UK-based Jaguar and Land Rover range of cars. Tata Motors acquired JLR from Ford in 2008. Now, as of Q2 FY25, of the company's revenue of about 1 lakh crore, JLR alone contributed over 70%. Commercial and passenger vehicles contributed just 17% and 12% respectively. So, this was about the business of the three companies. To summarize, M&M is predominantly an auto and farm equipment manufacturer. The company also has exposure to financial services and other industrial businesses. Maruti Suzuki is a pure play car manufacturer, and Tata Motors has interest in cars and commercial vehicles too. But the major source of its revenue is its UK-based subsidiary Jaguar and Land Rover. Okay, let's take a look at some key industry metrics and how these companies fare on them. The first metric is sales volume. Sales volume is the number of vehicles sold over a period of time. Change in sales volume is a key growth metric for auto companies. Now for FY24, Maruti Suzuki has the highest sales volume, but M&M has the highest volume growth year on year. Now sales volumes are disclosed by auto companies on a monthly basis too. So by keeping an eye on these, one can check the short-term performance and any emerging trends in demand. For instance, both M&M and Maruti Suzuki did well in November 2024. Tata Motors volumes growth was rather muted. The next metric is inventory turnover. The inventory turnover ratio helps measure how quickly the inventory is sold. It's an important metric in the auto industry. It's calculated by dividing the cost of goods sold by the average value of the inventory. Now usually the higher this number, the better. Among the three companies, Maruti Suzuki turns over its inventory the fastest. Tata Motors has the least turnover ratios. But it's also important to take into account the nature of products of the three companies. Premium products such as Tata Motors JLR line will have a lower turnover as compared to mass market products such as Maruti's budget cars. Still, given the wide gap, Maruti does seem to be doing well on this metric. The next metric is capital expenditure. The auto business is capital intensive. It requires companies to invest in their fixed assets like plants, machinery, and equipment. This expenditure is called capital expenditure or capex. Now, capex is often used as a proxy for growth, as a high capex implies that the company is geared for expansion. Let's check the capex numbers of the three automakers over the years. Now, Tata Motors is clearly the leader here in absolute terms. Its average capex over the last 5 years is over 4 times that of Maruti Suzuki and 6 times that of M&M. But let's also check capex as a percentage of sales to put this number in perspective. Now, Tata Motors' average capex to sales ratio is 7.44% as against M&M's 5.97% and Maruti's 4.95%. So Tata Motors is ahead here too. But one important thing, capex is just a proxy and not a direct indicator of growth, as capex also needs to translate into tangible revenues. If the capex has been incurred but the corresponding growth in revenue is not visible over the next few years, that can actually be a negative sign too. Let's talk about the next sectoral metric now: free cash flows. Free cash flow FCF is a metric that tells us how much cash a business is left with after accounting for operating expenses such as rent, marketing, payroll, R&D, etc., and capital expenditure. The excess cash left can be used to pay dividends or interest or repay creditors or to expand the business or for any other business activity. Now, FCF is calculated by deducting capex from cash flows from operations. Now, we talked about this metric and two other crucial cash metrics in an earlier video. I've included its link in the description. Since the auto manufacturing business is capital intensive, free cash flows are a good sign of business efficiency and strength. As of FY24, all three companies have positive free cash flows. In absolute terms, Tata Motors is way ahead of M&M and Maruti. However, Of the last 5 years, the company couldn't generate free cash in 2. Its free cash generation is also more volatile. M&M has the steadiest free cash generation of the 3. Now, if we see these free cash flows in terms of the operating profit, we can better compare the numbers. In average terms, M&M is the topper here, with Maruti and Tata almost at the same levels. Now, this brings us to the last but perhaps the most crucial sectoral metric, EV preparedness. EVs or electric vehicles are the next big thing in the auto industry. Naturally, all auto companies are investing in their EV capabilities. Now, according to Statista, a statistics and data provider, Tata Motors was the undisputed leader in the EV pack in 2023 with a massive market share of 72%. M&M is far away at just 7% and Maruti is nowhere in the list. But EVs are the emerging markets. So we went through the FY24 annual reports of these companies to understand what they are doing in the EV space. Let's begin with M&M. In FY24, M&M sold 74,000 EVs, including electric 2 vehicles, as against 46,000 EVs in FY23. That's a growth of 61% year on year. M&M has a 58.7% market share in electric 3-wheelers. However, this market share is down by about 8.9 percentage points year on year. Now, the company planned to roll out its first set of Born EV or BE range of automobiles. As of now, it has introduced 2 EV SUVs in the range, XEV9e and BE6. The company already has the XUV 400 EV. M&M plans to invest about 12,000 crore between FY25 and 27 for setting up the manufacturing facility, development and production of upcoming SUV EVs. M&M subsidiary Mahindra SLO manufactures EV components. Its subsidiary Mahindra Powerol has initiated EV charger business for home charger installation and has already installed 5,000 chargers nationwide. Next comes Maruti Suzuki. As of now, Maruti has no EVs in the market. Its first EV is slated to hit the market in 2025. The company plans to launch 6 EVs by FY31. Now, the company is currently focused on petrol and diesel vehicles but would like this mix to change by 2031. By then, 15% of its powertrain mix is planned to come from battery EVs and another 25% from hybrids. Next, let's take a look at Tata Motors EV plans. Now, a casual look at Tata Motors annual reports is sufficient to understand the company's presence in EVs. Tata Motors has dedicated an entire section in its annual report to EVs and has proudly revealed its EV related numbers. The company sold about 74,000 units of EVs in FY24, a 47% year on year from 50,000 units a year ago. It generated a revenue of about 9,300 crores from EVs. The company's domestic Vahan market share for EVs was a massive 73% in FY24. Vahan is a registration system for domestic vehicles. The company has a dedicated portal for its EVs. Its EV range includes the Curve EV, the Punch EV, the Nixon EV, the Tiago EV and the Tigor EV. So overall, as far as EV preparedness is concerned, Tata Motors is the clear winner as of now. Okay, now let's move to the next section, which is financials. Let's first take a look at the revenues, profit and operating margins. Now, magnitude-wise, Tata Motors is the winner here. On average, its revenue is about 5 times that of M&M and over thrice that of Maruti. But in terms of growth of revenues, M&M is ahead of Maruti and Tata Motors across both 3 and 5-year periods. Next, let's check the net profit and profit growth. The first observation here is quite obvious. While M&M and Maruti Suzuki have been profit-making, Tata Motors has recently turned a profit in FY23. Before that, it has been loss-making. The second observation is the 3-year growth numbers are significantly higher than the 5-year ones. This suggests a sector-wide turnaround and a rise in profitability over the last 3 years. Overall, M&M has a better showing than Maruti in profit growth. Next, let's compare the operating margin of these 3 companies. Now, all 3 companies have improved their margins in recent years, which has contributed to their better profitability. M&M had a higher margin profile than the other 2 companies. In terms of 3-year and 5-year average numbers, M&M is ahead of Maruti and Maruti has a small lead over Tata Motors. Lastly, let's check the average return on capital employed over the last 3 and 5 years. Here also M&M is ahead of the 2 and Maruti is ahead of Tata Motors. Since Tata Motors is a turnaround case, its previous year's ROCE is much lower, which has also pulled down its average. Overall, in terms of key financial metrics, M&M is the clear winner. Tata Motors' turnaround is also quite evident. Now this brings us to the next section, which is stock metrics. Let's start with the historical stock performance of the three companies. M&M pips Maruti and Tata Motors quite decisively across all periods. Tata Motors is ahead of Maruti over the 3 and 5 years periods, but it lags behind it over the last 1 year and 10-year periods. Let's check the dividend profiles of the three companies in terms of their dividend payout ratio. The dividend payout ratio tells us what percentage of profits a company gives away as dividends. Over the last 3 years, Maruti Suzuki has done better than its peers with its dividend payout ratio. Since Tata Motors was not profitable, it gave dividends in just 2 of the last 5 years. Lastly, let's check the stock valuation versus their historical medians. We will use 2 metrics here, price to earnings or PE and price to book value or PB. Now M&M is clearly overrated at moment with its PE and PB at a premium of 57% and 99% to the historical medians. Both Maruti and Tata Motors are quite cheap. Maruti's discount to its median PE and PB is at 32% and 9% respectively. Tata Motors trades at a discount of 49% and 15% respectively. So given all the information, which stocks appears to be best placed? Let's summarize the findings in the concluding section of this video. So M&M, Maruti Suzuki or Tata Motors? As far as the business of these companies are concerned, there are stark differences. M&M is a play on SUVs, commercial vehicles and farm equipment. Plus, given its stake in a multitude of businesses, its overall performance has many levers. This could be both good and bad. Good because M&M is more diversified. Bad because its various businesses units can move in different directions, thus cancelling out each other's performance. Maruti Suzuki is a pure play on passenger vehicles. And by investing in Tata Motors, you get exposure to passenger vehicles, commercial vehicles and JLR. Now these different business orientations can have varying effect on stock performance. So an investor, you should keep this in mind. Let's summarize the relative performance of these three automakers across the parameters we discussed in the video. You can use this table and combine it with your own research to arrive at the best auto manufacturer among the top 3. Of course, don't just rely on the data, but also take into account the qualitative aspects as well, such as the businesses of the three companies. Also, don't discard the fact that Tata Motors is turning around, so it's natural for the company to have lower averages than the other two. So this is all the information. Now it's your turn to wear your analyst hat and tell us and your fellow viewers which stock would you prefer and why. Now based on your comments, the winner among the three will be decided, so do ensure you get your opinion registered. And that's all we had for you today. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.